Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. It's October 28th. Hope you guys have a great upcoming weekend here, especially at Halloween. Hope you guys enjoy yourselves at some of these Halloween parties coming up here. Hey, we got a big day today. We got the first look at our GDP, which we'll jump right into. Here's our look at the first look at the Q3 GDP. There are revisions coming ahead, so this will be the first look. We'll get the final one in December. We'll get another one in November. So, with further ado, we had second quarter only grew at 1.4%. The forecast for GDP Q3 was at 2.9, and it came in right at expectations. Now, I did see other people come with a little bit lower expectations, but we had expectations right around 2.9%, and it came in at that. Now, stay tuned. I'm going to do a little bit of special on this GDP because this looks like a great number. We're usually should be in a 2% range on a normal market, but there's some underlying facets I think you guys need to take a look at. That this is not as rosy as it may appear. So also we got the employment cost index. This is kind of like the inflationary on the employment number, so this kind of gives you what it would cost for have employees. So the cost went up the previous reporting in 0.6% in the second quarter. Forecast for Q3 was supposed to remain at 0.6%. It came right at forecast again. So now it did go up in 0.6% in Q2, but it went up another 0.6% in Q3. Consumer sentiment. This is the final revision. We get usually two views of this, and this is the final one for the month of October. So our last reading came in at 87.2, and the forecast we thought would go up 88.5, which it did go up, just not quite to the expectations at 87.9. So it kind of met us about halfway there, right there. So let's go ahead and take a look at the special as we talked about the Q3 GDP here. Now, as you can see here, we went from 1.4% to 2.9%. But the big thing we really need to kind of look at is right here, consumer spending. This makes up 2/3 of the overall GDP number here. Second quarter, we had 4.3% consumer spending. Third quarter came in at 2.1%, much lower than about half of what we saw in second quarter. Now, this is kind of important because a lot of the media out there, including the White House, is putting out there that we had this great number coming in due to consumer spending, which here, I don't know what numbers they're looking at, but clearly consumer spending went down. So it's not due to consumer spending. Now, if you look down here at exports, we had a big jump in exports. Now, the reason behind this was because we had a huge temporary boom in soybeans. We exported a bunch of soybeans, which created about 1/3 of the overall GDP number there as a result of that. So this was actually due to a very temporary blip mark, which is due to soybeans that we shipped overseas, we exported. So be careful with some of the numbers that you might hear out there. I got the thing down here below. I'm going to stretch this out a little bit because apparently it's not, apologize for that, but let me go back here. But I want you guys to see the whole index here. Let me see if I can get this down here. So it's at MarketWatch.com story, GDP hits. Sorry, I guess I'm not able to do it. So what I'll do with this link here, I'll put it at the bottom of the, so in case you guys want to research this yourselves, you can take a look at it here. All right, so let's move on here to the headline news. Stock market's result, they like that GDP number. Overall, we do have some earnings reports that came out. Remember, yesterday we had some big ones that came out, including Alphabet, which is Google, which went up. But one of the disappointing ones came in was Amazon. That went down, one of the biggest drops at 4.7% so far today. So those came in after hours yesterday, which is affecting the stock market today. So it's kind of creating a better view of investors really kind of take a look at the valuations of these stocks. Are they really in position to be where they are, especially when there's most likely a rate hike coming up in December, which is like 70 right now. The Fed funds futures right around 73.5. That will continue. So they're really looking at these different facets as to the valuations of stocks, and you may see again some correction here coming up here. So right now, as it looks like, in the month of October for the stock market will be down, which will be the first time in a while we've seen that. So here's the bond market. We are up for the day, but look where we started. We started just below the 200-day moving average, which kind of continues this trend here, which is what concerns me. a bit. Instead of coming up here sideways, we start up lower. We're up about 3 basis points from where we left off yesterday, even though we came in really down low below yesterday and pulled up above and I think we end up with 22 basis points instead of like 35. Down 25 for the 35 for the day, and brought us above the 200-day moving average. But here we started again above or below the 200-day moving average. This is kind of an important gauge here because we don't want to be testing this too much, or at least drop below it. If we do, which could leave us continued price worsenings. Obviously we love to see interest rates up here. Improve here. So when the market goes up, that's when the interest rates improve. So right now we're seeing a continuation of this trend downwards, which is rising, making the interest rates rise. All right, so let's go ahead and take a look here at the. Anyways, I'm sorry. Basically, that concludes it. But if you guys want to get updates throughout the day here, just go on to Twitter, and I post updates throughout the day, so you can kind of see what the market's doing on Twitter at Mike Bjork. So. All right, folks. Sorry, it's kind of a long one today. I want to kind of give you that breakdown of the GDP so you can get better numbers. Unfortunately, the media and them kind of bring out some misleading numbers, and I want to kind of show that to you so you guys can think for yourselves. You guys have a wonderful day. Thanks so much for watching. And we'll see you guys on Monday. Take care.